Hey guys, how's it going? It's Andy from Magooinvesting. Happy Monday. Hopefully everyone had a fantastic weekend. I got to spend it with all my friends celebrating their fake graduation day. But now that we're back to Monday, it's time to go back to the stock market. So far the market seems like it's down around 1% right now. People are still worried about an increase in the coronavirus cases, and it'll be really interesting to see how this week pans out. Today I wanted to talk about a change in the stock market that we've seen overall that could have huge long-term implications for just how the market moves overall. And it's something that I've been noticing mainstream media have been talking about a lot recently, and I thought that was very strange. So in today's video, I'm going to be talking about the increase in retail traders, especially on places like Robinhood, and how that's affecting myself as a stock trader and some of the changes I've seen in the past couple months. But before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinions, talking about what I see with the overall stock market. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as will help my channel out a lot. Also, 90% of you guys are not subscribed, so go ahead and hit the subscribe button right now. So in the past couple weeks, I've been seeing a lot of coverage about Robinhood, specifically on mainstream media, which is something that I've really never seen before. I follow people like Jim Cramer on Twitter, and they've been posting some screenshots from CNBC of people talking about kind of the trend of Robinhood investors and kind of talking about the most popular stocks on Robinhood. And I saw this infographic where they were kind of talking about the overall stocks that have been very popular on Robinhood, and it kind of seems like they're rooting against these new traders on Robinhood. Just last week, I was talking about Robinhood Top Stocks, and I was using robintrack.net, which is a great website that shows the change in a stock price over time, and it also shows the changes in ownership on Robinhood. And from that video, I saw a very interesting spike in the number of users on the site in the past couple months. I've seen some articles talking about there's been record numbers of new people signing up for Robinhood, which is very interesting since we've been stuck in this lockdown, and it seems like people are actively trying to figure out how to start investing. The place that this was most apparent was with airline stocks, which were not very popular going up until the pandemic started. And then when things started getting really bad and the airline industry was getting crushed, we saw this massive spike in the popularity of these stocks on Robinhood. And then American was the third most popular stock, and then Delta was the fourth, when just a couple months ago, it was not popular at all on the site. So as I've mentioned in plenty of other videos, I think the changes that Robinhood has made to the investing game cannot be understated. I think it has huge impacts for how people are going to be investing in the future. Now we have zero commissions, which was a huge limiting factor for people getting started in the stock market. I've always talked about how you don't need that much money to get started investing in the stock market. But in the past, when you had to be paying $5 commissions on every trade, you can't buy single shares at a time because you're going to be at a huge disadvantage if you're paying $5 per trade for anything that you're going to be doing. And now with the creation of their app, which is significantly easier to use than many of these larger brokers like TD Ameritrade, it has made it so that the stock market has been the most accessible it's ever been. And now that we have fractional shares, you can invest in pretty much any company with just a couple dollars. And so this change has likely increased the number of younger people that have been investing in the stock market. While we don't have specific numbers at this point, some of the recent trends I've seen is that around 50% of US adults are not invested in the stock market. But it seems like there's been a significant spike in the younger generation for the number of people investing in the stock market. Some of the ways that I've seen this is there's been some articles talking about unusual traded volume on some of the major brokers, stuff like Robinhood, TD Ameritrade, Charles Schwab, where most of these platforms have seen a 100% increase in their trading volume in the past couple months during the lockdown. And so I've seen this trend going on with my YouTube channel. Before the pandemic started, my subscriber count was probably around 1,000, and now it's getting around 4,500. And there's been a huge spike in views during this time, and it seems like people are actively searching out educational content to try to figure out how to invest in the stock market. One of the really interesting things is the most popular stock for retail traders. Retail traders are the people like you and me that are buying individual stocks, and it's not a bank or a financial institution that are buying these massive amounts of shares. And so apparently the most popular retail stock right now is Penn, the gaming company, which actually owns a large portion of Barstool Sports. And this has been really interesting because with Barstool Sports not having any sports to be betting on, the founder and former CEO of the company, Dave Portnoy, he has this new personality called the Davey Day Trader, which he talks about the stock market and live streams what he's doing every day. And so this cult following that Barstool has, and now the massive figure from this company, has made it so that the younger generation seems to be a lot more interested in investing than previously. And you can see this with Penn, which jumped more than 100% since the lows from March 23rd. It's also really interesting because Dave Portnoy actually has a really good relationship with Jim Cramer, which are two personalities that I really did not think would ever kind of interlock, because in the past, Barstool has been mainly about entertainment, sports, and then Jim Cramer has been this investing personality for 20 plus years, and it's someone that I grew up watching. And it's really interesting to see these two worlds kind of overlap. And so it seems like with sports betting not being possible at this point because nothing's going on, it seems like a lot more money has been entered into the stock market. And what does that mean overall? It means that we're seeing some massive changes in kind of the behavior of the stock market overall. And so while there's been some discussions in the past about how much impact the retail traders have on the stock market overall, when you have an unusual spike in volume and new people getting into the stock market overall, you get some weird trends in the overall market. And one of the main places that we've seen that has been with speculative stocks. And so one of the first places that I kind of noticed this unusual trend has been with Chesapeake Energy, ticker symbol CHK. This has been a beaten down energy stock that I've talked about on this channel frequently and talked about all of the horrible things associated with it, its incredible amount of long-term debt, and just some of the main problems that the company has been having overall. And 2 Fridays ago, the stock was trading in the $15 to $18 range. And then the next day, Monday, there was some rumblings about them potentially going bankrupt, but there was no actual news event that came out. And so it closed that previous Friday at $14, and then by the time Monday closed, it was at $85 and was on ridiculous amount of volume. And this was with no news. And so there were a bunch of halts. Trading halts are when the stock market or a specific stock moves too fast at any given time, and the New York Stock Exchange automatically stops the trading on these companies to kind of wait for potential news events that are coming out or to make sure that everyone has all the information that they need. And so during that day on Monday, there were 22 trading halts, which is the largest number I've ever seen. We had some halts for the overall market, which was really unusual. I'm pretty sure we had around 7 of them, but having 22 individual halts on one stock in any given day is ridiculous. And so a lot of the discussion for why that's been happening, considering that there was no major news, is the fact that these speculative investors, mainly from Robinhood and these newer investors, have been pushing the price up significantly. And we've seen this a lot with some of the speculative stocks, especially the airline industry. As I mentioned, there was a huge spike in the trading activity on Robinhood for these major airlines, which were not very popular on the site previously. And so when you have increased volume on these stocks, it means that these stocks are going to be more volatile overall, even though these airline stocks are already volatile. We've been seeing plenty of 10% moves in the airline industry, and now it's become just kind of commonplace, which is not something I would have expected just a couple months ago. One of the really interesting speculative stocks has been Nikola, which is ticker symbol NKLA. This is the electric truck company that recently merged with Vecto IQ to have a special version of their own IPO, and it has recently increased in popularity significantly. There was some major news in the past couple weeks talking about how the company was opening up reservations for their electric truck, and as a result of that news, the stock shot up significantly. In just a couple days, the stock went from $30 up to $85, and now it's sitting around $61. And at this point, they have not actually had any sales. It's just opening up reservations to reserve your place to be able to buy one in the future. And so as a result of these major moves, it was really interesting to see that this company that actually hasn't sold any products has a higher market value than these well-established automakers like Ford. And so while this could be a lot of excitement, I've seen a lot of articles talking about, is Nikola going to be a Tesla killer? The rapid increase in price with no real sales makes me feel that it is a major factor coming from these speculative investors on places like Robinhood. And so going back to robintrack.net, where we can see the trend and popularity of a stock over time, you can see that in just a couple weeks, the stock went from not being owned at all to around 140,000 people buying Nikola in just a couple days. And so this resulted in the company being the 53rd most popular stock on Robinhood, and going from being a name that no one really knew to being incredibly popular, mainly because of the rapid increase in price that we've seen over the past couple weeks. So now that I've given some examples of where we've seen this increase in volume, what does this mean for you as an overall investor? When you have more money and more volume going into the stock market, it means that individual stocks are going to be more volatile overall. And so with these speculative stocks have a part in pretty much everyone's portfolio. It has a lot of potential for huge gains, but it also has a lot of risk associated with them. But at this point, the crazy amount of movement that we've been seeing with these speculative stocks is making me kind of shy away from them overall. This rapid increase in volatility has kind of pushed me away from them, and I'm looking for safer alternatives while this volatility has just been spiking recently. But it's a really good thing that people are starting to get involved in the overall stock market. As I mentioned, only 50% of US adults have any money invested in the stock market. So this is a very good thing, and it's been really interesting to see it as a result of the pandemic and people being stuck inside, not being able to sports bet. And so we're going to have to see the long-term implications of this new money being injected into the stock market. In the past, there's been discussions about the overall impact of retail traders compared to the institutions that are trading hundreds of thousands of shares at any given time. But when we're seeing record number of new investors signing up for places like Robinhood, and the volume on these interactive brokers has gone up 100% in the past quarter, you have to start kind of thinking about the overall impacts that they're going to be having. And so far, it seems like they're mainly happening on speculative stocks, stuff like Chesapeake Energy and Nikola. It's really been interesting to watch the mainstream media kind of target these new investors on Robinhood, and it kind of seems like they're pushing and hoping that they're not going to be successful. And it's been really interesting to see this kind of clash between this older generation of investors and these new speculative investors that have just gotten started in the stock market during a global pandemic because they don't have as many other options to do stuff like sports betting. And so when things start opening up fully and we have sports back to normal, it'll be really interesting to see if we still have this crazy amount of volatility in these speculative stocks, or if people are going to be taking their money out of the market and go do other things with that money. But right now, it seems like retail investors are having a huge impact on the massive market recovery that we've seen in the past couple weeks. And so last Monday, I made a video talking about why I was worried about the overall stock market, because there seems to be an incredible disconnect between the things that we're seeing out in the world and the evaluations of these stocks. And it seems like a major factor of it has been coming from these retail investors. And so at this point, I'm not going to be buying anything new in my portfolio, and I'm just going to wait to see what happens. I have money set aside in case something major happens with the market and I want to buy into a company that I love. But at this point, there's just so much volatility and so much uncertainty going forward that I'm going to stay back and just kind of watch to see what happens. So I'm very curious to see what you guys have to say about this topic. Retail investors have not had a huge impact on the market over time, but it seems like times could be changing. And I'm very interested to see if this changes the way that the overall stock market moves. So let me know what you think about retail investors in the comment section down below. Thanks for watching this video. I really appreciate it if you hit that like and subscribe button, and I will see you guys on Wednesday.